The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful November 21st. And if you're not watching Tiger TV, you're probably wondering, what is special about today? Normally we have rename your PC day, all kinds of weird stuff that I find out there that is interesting. But today is the 10th anniversary of the helicopter speech from helicopter Ben Bernanke. It's hard to think that it's 10 years ago that he gave the helicopter speech, only become the helicopter man himself. In fact, 747s filled with cash, C-130s, C-5 cargo planes, loaded and loaded with cash, just shoving it out the back end all over the populace of America, trying to catch fire, and even a little bit of discussion of QE4 and QE5 already today in some of the media. Never think that it's going to go too far out there, but it's rather interesting. For the markets out here, we're going to take a quick look early on. No big deal when the markets tend to be rather flat going into holiday weekend, and this is no different. We've got the S&P at 1391, so we're up 3 points, no big deal. 1.7 billion shares. We're going to have a light day, probably a light volume close. Look at probably 2.4, 2.5 billion shares if you're lucky. It may even get quieter before the end of the day. Not a lot of money to be made in these markets. We were down to, 1386 up to 1391, 5-point move. Just not a whole lot of movement in the marketplace. You can always give me a call at 877-927-6648, 877-927-6648, and we'll discuss what you want to. But kind of a slow news day out here. We've got a few things happening. One of the charts I wanted to show is from Bespoke Investments. Every once in a while they do a lot of research and pop up a really nice little chart out here for us to look at in the market. And what are they showing? They are showing us the returns back to last 10 years, back to 2002. Let's see, 2011, we had a almost 3 percentage point bounce on Monday. But other than that, pretty negative. In fact, the worst one was almost a 9% dump the Monday after Thanksgiving in 2008. Is there any big... 2007, you had a nice bounce, 1.7% up on Friday, but for the most part, it's well within the margin of error of just a normal bounce in the marketplace. Again, it's going to be very light volume on Friday. We will not be here at TFNN because we know it's a good time to take off. There isn't going to be a lot of movement on Friday. Bets most likely or best to be placed on Monday and probably not Friday. This is going to be even a little bit more confusing this week because of everybody pushing Black Friday into Thursday. The question is going to be, and probably not answered until the end of the weekend still, about what the numbers actually mean. Did people that came out Thursday night not get the opportunity to are they actually buying more? Are they just leaching sales into Thursday where they would normally be open Friday? I think it's kind of a dumb move for Walmart to go ahead and try opening on Thursday because it's opened up the unions to come and try to unionize Walmart. And there's been a long feud out here trying to unionize Walmart, part of the whole card check thing, and not being able to vote secretly is one of the big pushes of the current, I'm trying to remember the guy's name now. He's the guy that kind of oversees the Labor Relations Board. I can't remember his name right now. But he basically has denied a request by Walmart to keep the people from protesting on Thursday and Friday. But pretty much this is a unionized thing. It's pretty much been proved already in the press that this is kind of being spearheaded, trying to get labor back in gear. They've lost people for a number of years, and it's probably not going to be anything new. But we'll just have to keep an eye on that. Other things in the news, not a lot out here that is really, I would say, job-breaking. A lot of stuff. Did the Tech Insider. Of course, short week to do that from Friday back to Wednesday. You know, probably the biggest thing in tech this week is still the problems that HP is having. Very rarely do you see a CEO from a company that got bought out where the acquiring company is alleging fraud come out on national TV and say that he had nothing to do with it. Most very smart attorneys would tell you to shut up because you're going to look really bad when everything comes out. But it looks like the way the fraud was perpetrated on HP, if you believe their accounting, and if both Oracle and Jim Chanos are doing victory laps about this actually being in their books, but they were adding goodwill immediately to the balance sheets on acquiring companies, and this is the company that HP acquired. They were acquiring companies and basically amassing huge amounts of balance sheet funny money on the opposite side. At least that's the allegation, and I would think that it's fairly true because before HP or any other company gets into a lot of who shot John on these kind of acquisitions, they'll hire several forensic legal teams, and those folks go back through all the records and all the accounting, and they try to find out where best accounting principles were not followed. And my guess is if Meg Whitman said it, that it's not only possible, it's almost probably certain that they were doing lots of sneaky things to get that balance sheet up. One of the reasons this is important is a lot of the shares were given under lockup conditions to the company that they bought, and that means that they probably haven't had time to sell them all. There's a good chance that those now can be almost locked up if those people actually sell them, if they haven't sold part of what they have already. But you don't get to instantly sell those shares generally. No one wants to acquire a company, give them a bunch of shares of HP, and have them dump them on the market the next day, destroy your stock price. There's a lot of lockups, 2-3 years of working with the company, and I think a lot of these guys think that they would have been gone by now and out the door, being able to sell their shares at will. Of course, little did they know that HP was going to take it on the chin. So if they did actually do a fraud, probably going to make a whole lot less than they thought they were, than that $10 billion. Of course, HP already wrote that $10 billion off at the current price that they paid for it. And I haven't dug through exactly how that acquisition went. But it's going to be messy, and most times when the SEC gets involved, it will take up to a year or sometimes even longer before this comes out. What does that mean? HP is going to have a cloud over its dealings for an extensive amount of time. So we'll just keep an eye on HP, but that pretty much means that you don't know. Everybody calls HP a value trap here. The problem is no one knows what it's worth because no one knows what that $8 and $10 billion that they acquired actually was worth and is worth today and will be worth tomorrow. Apparently, a lot of what they were doing was accounting for one thing, like maybe a PC with software on it, and counting it as software and adding additional sales to that existing sale, trying to bloat the profit margin up to make it look like they were selling software and not software-hardware combinations. So I suspect there's probably a good chance that that CEO is going to jail that allowed them to buy it at that price, mostly because they told the truth at Oracle when they went over there. Oracle came up with a price of about $2 billion, that what the company was worth, and I think they went back to HP, cooking the books awful far to get the kind of money that they wanted to sell that. What was it? Begins with an A. I can't remember. Having a tough day out here. You can always give me a call at 877-927-6648. 877-927-6648. We'll love to talk about what you would like to talk about. We've got a nice slow-moving market out here. I imagine that with the volume, a lot of the traders have already left. But 1390, I thought maybe we had a kind of a high at 1387. We've gone about 4 points over that, but the volume has been light. I suspect we're in for a rude awakening on Monday with probably a flat to slightly down Friday. We'll see. People have surprised me before. I don't have a dog in this hunt right now. We only have one trade in the daily newsletter. We are flat in the Tech Insider, and I'm waiting for a really good movement out here to suggest somehow that somehow we've got a better place to actually start some new trades. But kind of tough to figure that out. We've had a few stocks out here. One's a highly short that are continuing to bounce. But what are we going to do with those? Bouncing a little bit is not a big deal. We've got one position in the daily newsletter. It's up almost 2% today. But it's not in the traditional markets, tech market or that. It's more in the commodities marketplace, and it seems to be doing fairly good for us. We're going to take a look at the S&P. Had a question, and you can always email me at path@tfnn.com. That's P-A-T-H at tfnn.com. But they were asking about how I was figuring the expansions and retractions on the S&P to get this very short, very narrow confluence range that really did predict where this market was pretty much going to stop. The bottom side of that confluence range came in at what, 1346, and we got down to 1343. So 2-3 points away from it was pretty good. But if you want to see that chart again, you can catch it this time. Go back and look at the archives on Tiger TV and you can catch it. Give me a call, 877-927-6648, 877-927-6648. Give me a ring. Pick up that phone. You can do it.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And we're going to take a quick look at Apple's internal supply chain stocks here real quick. That's been kind of the key to the way this market has been moving for a while. There's been two out of about the seven that account for, 90% of the parts cost inside the iPad mini and the iPad and the iPhone. And that is ARMS Holdings. They get the license for the processor out here. They've taken off, and one of the interesting things is they've broken above the previous high out here. And even when Apple was sucking wind, they continue to do a little bit better. I still suspect that this thing is coming back to the $28 range. Nothing since that little breakout that happened under the previous highs. And once it broke above those previous highs around $31 and what is that, $31.81, the volume has not come in strongly in that 32, high 31 area. So that one looks like it's paused for a return. Even though we've had a little bounce in Apple, Avago Technologies is another one. They make radio parts for these the iPhone 5s and some other interesting little chips that go into it. Not much movement in that. You would think that if Apple was really turning around the iPhone 5 and other businesses, that you'd start seeing a lot more business in Avago. Same thing in Micron Technology. Yeah, did you get a little bounce out of here before Apple? Yes, but it's people are taking an opportunity to go ahead and sell MU on the bounce. Now, let's look at OmniVision. They make the cameras for the iPhones and for the iPads and iPad minis. So what do we have in that? Yeah, you got a nice little bounce, but did it come on anything that even comes to close to high volume? The answer is no. You're getting two little dojis out here to the side. I suspect you have one more good chance of testing this big gap that goes back a few months. What day was that on? Looks like on June 26th. You had that nice gap up. And volume all that big? No, 2 million shares. But certainly we haven't really blown away anything back in there. We got 1.9 on November 15th. That makes me think that we get one more stab and one more bite at the apple down here, just under 13 on OVTI, OmniVision. And Qualcomm, another one, you would think that, they are not the leaders like ARMS Holding is in this sector right now. So what do you have on news? Not much of a movement out here. This thing's stuck right around 62. You did have kind of a little bit of a reversal day last week, and that's been it, and now you're consolidating straight out sideways. Skyworks Solution, the same thing. Are you seeing much of a bounce on Apple's big movement here over the last few days? And the answer is no. This one's kind of already done what we were looking for, and the other one is that it had that gap up, that gap a little cleaner on this chart, Skyworks Solution, SWKS. You had almost 16 million shares on the 20th of January. You got back in here with 9.7 million shares, but you don't really have a sign of strength out here that makes me think that this thing is done. You may have one more bite at the apple back on this one at 1950, 1921, and I suspect we get back into this or that area next week. So probably forecasting that Apple may have a little bit of a pullback also. Triquint Semiconductor, another one where you had the gap up that's kind of acting as support right around $4.25. Of course, you had some decent volume up. Not a big signal out here. You did test $4.30 on 7.5 million shares on October 26th. Came back into that on lighter volume of almost 3 million shares on the 16th of November. But again, normally what you want to see in these movements is a lot of movement. You want to see, something coming out, some kind of action. And normally when they go sideways like this, good chance you're going to at least come back and test this low back down there in that 430 range one more time. So, is there anything in the Apple supply chain that really makes everybody suspect that Apple, this is anything more than a bounce in a downturn? The answer is no. Now, when we go to look at Apple, you had a little sharper move out here. But again, you had that one big day down, kind of a reversal of okay volume the next day. Last 2 days, very light volume back in here. Could this thing get back into that 530 range? Pretty easily. And short of gigantic sales over the weekend, I think you're going to see that. Give me a call, 877-927-6648, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we'll look at some other stocks out here that have been making some tests. Take a look at them real quick. I think we brought this up yesterday, and it's Tidewater, TDW. Got a little farther to go out here. But we saw crude kind of bounce this morning. The notes around the time that the rumors of ceasefire in the Mideast started to roll around, started to see a little bit pull back. Pretty much only good for about a point or two, maybe 3 points bounce in the S&P when that came out, and then pretty much got back to exactly what we were doing before. But not a lot of movement out here. But we continue to see highly shorted stocks like BACs, up 1% today. Some of these other ones out here that are in that realm. But I think they're probably setting up for another good move out here. With Apple up at 561, something like that. Kind of hard to see a lot of movement. Let's get back to Tidewater here, though. It's got a big low of $38.80, 1.2 million shares on the October 4th, 2011 low. And what we've got is a possibility of getting that if we can break down between these that $43.14 level from May 21st of this year. 3.3 million shares doesn't look very likely. You got that November 16th low out here that came in. You haven't tested that previous low yet, you would really, well, was that 42? Yeah, 42. I guess you have, that was 43. So we've tested that low. We've closed back above it on very, very light volume. So maybe we were making a base out of here. Maybe we're going to get some of these low volume lows retested one more time. But there's some stocks out there that are showing some fairly decent signs of support. One of them today that is not is St. Jude's Medical. STJ is a symbol on that. It's blowing through its previous low of December 19th, 2011 of $32.13. 6.6 million shares going to go through it already with over 20 million shares as we blow right through that low. You know, probably the weakest thing, hopefully you can all see this, I'm going to point it out. If you see my little arrow, the power law vector indicator that I have here shows a 5.3 on the way up. That's a combination of the price movement, the time it took for that price movement, and the amplitude of that price movement. So basically puts all three of those in one move to see how much energy was expanded actually to get to that high. Anyway, you had a pretty one, 5.3, but on the next move back up, it was tepid. It certainly wasn't stronger than the last move up, 3.8. You weren't able to get to the previous high. You got fairly close, about a buck underneath it, with about 75% of the volume. You gapped down off that high on fairly strong volume of about 6 million shares, and it's just been going down from there. I wonder if there was any news that actually generated that today. Let's see. Yep. Let's see what we have here on SJ. Not many stocks out there making the big move. Let's see. Falling as much as 15 cents following a report by the Food and Drug Administration questioning the safety of one of the company's lead products. The FDA claims that the design verification activities in one of St. Jude's leads known as Durata are inadequate. This isn't the first time either St. Jude's leads, which connect a heart defibrillator to the heart, have come under fire. So, pretty good indication that if you screw up and it's keeping someone alive, probably a bad day at St. Jude's Medical. But who knows what the truth is. Medical issues, it always becomes somewhat problematic. Let's see if there's anything else out here. Lowe's was kind of interesting. I wanted to see how it worked out. It did break out. We needed 11 million shares on its breakout. You had 25 million shares. So a guaranteed breakout. You'd like to come back down to maybe 32.50 and kind of fill this gap. So this is one of the ones that is working correctly out here in the marketplace, and that is that if you get a decent pullback, 32.50, about halfway through that gap, probably a good indication that you might get a chance to buy this thing and have it continue to run. But it did break out. It did break out on volume, and the pattern is fairly strong so far. Would like to see a little bit of stronger volume over the last 3 weeks on this move back up to the breakout level, but you got it. You got it with a sign of strength, and that's all that matters. Not a big deal. I think it was EDU that I was looking at earlier, which is one that, New Orient Education Technology Group. This one just got blown apart, and that was on June 17th on just massive volume. In fact, hit the low down here on 69 million shares. We're back up trying to fill the top of that gap yet again on 3.5 million shares. Tried to do it on the 15th of October on 10 million shares. This one looks awful close to topping out at here. Symbol on it is EDU, and another for-profit education, whether it's in China or the United States, continues to be an issue. We've got plenty of time left here in the show today. Give me a call at 877-927-6648, 877-927-6648. You've been watching Exhibit 8, stay here. Okay, so last we have is Alara. ALR is a symbol on it. This one may be trying to base out. The problem is you had a little higher volume out here coming back down into the lows, but not as high as the previous low of the June 25th low that was 5.2 million shares. If this thing closes back above that $17.62 low from June 25th, you certainly have to be thinking that you might have a decent move out here. You kind of bounced above it. We're going to close 1658. You need this thing to actually have a sign of strength out of these bottoms. But Larry, let's see, what is the profile on them? Take a quick look at those. Patient diagnostic monitoring and health management products. ALR. So that'd be another one I want to take a quick look at on Monday. What do we have here? Let's see. Tests. Let's go back to see some of the ones that were testing moves on Monday. One of them is Best Bad. Let's see, Bed Bath & Beyond. The one I always wonder what's beyond. Maybe you go to the back door, you go into the Twilight Zone or something. But BBBY, not to be confused with Best Buy. The June 26th low came in here at 4.7 million shares, $58.77. Went below it. Really not another. Didn't really get the kind of volume you'd like. It did gap down fairly hard, which means that you're going to have resistance back up in the $64 range. But certainly is closed below. Volume never came in. It's make sure 58.99. Yeah, it's actually getting back in here and confirming a buy signal at least. Bed Bath & Beyond, of course, probably going to do okay over Christmas. Not a whole tech thing, and it's a lot tougher to buy products off the shelf there on online. Not as easy to buy a big $500 TV online. You're buying one thing. You're buying a lot of stuff at Bed Bath & Beyond. A lot of little stuff. But this thing actually may be doing some kind of nice bottom out here. Probably going to consolidate for a little while. But we might see some bottoms in BBBY here fairly shortly. We've been talking about some of the new games coming out and how huge they were. This is helping GameStop for the moment. They also are closing 200 locations, and I think that's a bigger issue right now, is getting rid of some expenses. They've had some decent volume, but it hadn't been over the last few days. I suspect that if we're looking for stocks to short, this one may be at GameStop GME, and it may be late in December before we get a chance at this, but it's going after the May 24th high out here, $28.66, 6 million shares. There's just fewer and fewer bigger games out here, and in the olden days you might have a whole host of games come out every week. Most people are playing that were used to that getting games all the time kind of thing are now moving to mobile applications where they're buying for $2 or $3. Certainly not buying those games from GameStop, and just with the idea that people are buying fewer games that are more expensive means that the people are a whole lot less likely to be hanging out in GameStop and buying additional programs, which has been their problem. But they've got a little bit farther to go, but we're already seeing some weakness. I didn't like the way that this thing went through the $25.86 level, that February 8th high out here that had 8.5 million shares. We really haven't gotten anything in the last few days, maybe 10. You had 10 million shares back there a few days ago, but still, need to see that thing hit that $28.66 high from May 24th, and take a look at it after that. Tesla's been doing okay, mostly on the New York thing and the gas lines. Now that that's starting to fade out, the question is whether or not that they can really reach profitability. At least the CEO is coming up with at least positive talking points about his company. Of course, they won the Car of the Year award. I think a little of that's going to go a long way. through the end of the year, but as gas prices, I suspect crude's heading back into the 60s, and it's going to break that $82 level and race probably into the $65 level. That's probably going to be some kind of long-term low on crude, I suspect in the spring. So we'll continue to keep an eye on this. It could go a little bit higher. I'd love Tesla to get back up in that $35 area range. And at that time, we could actually get an idea of what this thing's made of. But I suspect it's going to get back up there in that range, and that's going to be the next time to pull the trigger on this. Can they make cars, very expensive cars? 20,000 cars a year is just not going to be enough. And General Motors and some of the other car companies have some advanced battery technology, and it's going to be hard for me to see how Tesla, can they make better cars than everybody else? They probably make the same quality car, maybe a little better, but it's hard to get over the developer or the sales force that General Motors, Ford, and Chrysler have out there. When these guys pretty much get the power that they're looking for, at least the new battery technology that's going to get these up into the 400-mile range, that to me that's going to be the most important thing in TSLA. I think in the end of this, there's been probably 100 battery-powered car companies that have come along. The question is whether or not this one is actually going to do it right. Even if it does, I suspect it's coming out going to be a little lighter out here. So we've got some phone calls out here, but I don't see anything in my IM just yet. Maybe they're getting ready. Oh, we've got Nick from Oklahoma City. How you doing, Nick?
Doing fantastic. Thank you very much.
So we've got just a couple of minutes here in this segment, so we're probably going to go into the next one. You wanted to talk about IBM today?
No. C-I-E-N. Sienna.
Oh, C-E-I-N, or is it C-I-E-N?
Right.
C-I-E-N.
Right.
Okay, so what are you thinking about this one?
Well, there was a but announcement by major 4G companies that, like Verizon, AT&T, that they will be expanding and spending much more on companies like Sienna, JDSU. So I was wondering if it's time to start getting into the stock.
Well, the chart doesn't say so. You've got a nice gap. It just came up to that gap. That gap came down on heavy volume. You're going to need some... I would love to see, if you wanted to get into this thing, one more test of the low around $11.95. If you had light volume then, you could at least play it. You'd have a nice trading range between $15 and that $11.95. But you need a test of that low, you needed to pierce it, and you needed to close back above it all on lighter volume. I'd say you want that to be about 2 million shares.
Please, huh?
Yeah, it's just tough. You want to hang on through the break?
Yes, okay. I will. Thank you.
We'll be back in just a minute then. Anyway, we're going to be back talking with Nick from Oklahoma City about Sienna and maybe some these other stocks. But I think maybe we're waiting till the first of the year. A lot of these stocks are setting up that way. We'll be back in just a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we get back to it here, we've got Nick from Oklahoma City. He called in about Ciena. So you want to get into this fiber optic part of the business. You're thinking?
Yes.
I'm kind of looking at some other charts out there right now. The only thing I saw that is really kind of interesting in the news is they finally got the ability to send quantum data down a fiber optic line. I think just the last couple of days, they've got it to go about 90 kilometers. That may be the kind of impedance that really is going to take these companies and not just have a little move, but have a huge move. That may be a few years down the road, but it's going to be rather interesting. That would give you instant encryption and basically the kind of speed and data to run on current fiber optic cables and give us all the kind of data that we need. You should be able to at least use those fiber optic cables another magnitude of order of magnitude. So it'd be interesting. But I think right now the money is most likely going to be in something like VMware that's making the virtual routers in this space. I don't know if the whole fiber optic part of this is doing so well. You need a really big build-out, like Google, fiber. And, you know, right now it's just a test in Kansas City, but you need one more company that needs to to basically run a bunch of fiber itself to really get these kind of companies running again. And I just haven't seen that notice. That's probably Google, maybe some other big company out there really getting into data delivery. It seems like the almost thing to really get these things a big move. Tesla, just under $12 though. Gives you a nice trading range up to 15. $3, what's a 25% move? Not a bad deal, but you're going to have to get so much volume at that $15 level to really make it worth it. My question would be, do you see any better stocks out there?
I'm going with the trend. I don't think that I can answer that unequivocally, but I'm going just with what technological advances are requiring or asking for.
Yeah, there's just not that much in fiber optic that I know of right now. Did you see something else that maybe I missed this week?
Yeah, that was, I think, a week or so ago, that news about AT&T. That's who is going to use and will allocate about $14 billion to use fiber optic technology. Can't remember exact date, but...
I'll have to go back and look at it. I must have missed that. That would be one of those good things. Normally, is that when Ciena jumped that day?
Exactly.
And it gapped up?
Every fiber optic jumped that day, and then I was waiting for that to come down. You know?
Well, you're getting close out here. I just suspect that even though they've made that announcement, that jump would have been a lot bigger if they were thinking a lot more of it. It's not bad. I still think that we have a good chance of selling back down for a little while. And I would probably think that if you're going to make any money on this, it's probably going to be after the first of the year. So
that's the long term.
Yeah, I wouldn't get real froggy here about jumping all over the market, at least until Monday. We'll probably have a very good idea what the rest of the year is going to be like by Monday afternoon. Okay? Thanks for the call, Nick. You all have a safe and great Thanksgiving Day. See you then.